And we're live. Content provided at the event is for general information only and not intended to provide specific recommendations or advice for any individual. Any performance reference is historical and no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities are offered through LPL Financial, member of FINRA SIPC, and investment advice is offered through Gimbal Financial, registered investment advisor, a separate entity from LPL Financial.
Nice work, Amanda.
Might be my fastest yet. I don't know. Don't hold me to it, but.
I love that artwork behind you.
Dave Galloway. Shout out to Dave. He has been helping us with our newsletters for, gosh, how long? Over 20 years?
Probably, yeah. He's been a staple to us.
Yeah, and he is, I guess, full-time photographer. He does pretty cool things.
He's pretty amazing.
The world.
He has a little studio in the basement, and he can even print from the basement. And so technology has enhanced our hobbies. All of our hobbies are better today than they were 20 years ago. Even if you're, doing something like a blacksmith, I bet your tools are better than they were 100 years ago.
What are they? Is it a dirge, a death dirge, or something like a sad song? Is that, that term? Do I have that right? But yeah, on my 50th birthday, he came all dressed up in his whole Scottish outfit with his bagpipes playing some like pessimistic thing for me. So he's a multi-talented guy.
That's cool. Well, we are in the arts district too, so come on, stop by. That's why we've got this. We've got the art behind you. We are slowly but surely increasing our artistes in the office. So come on by, stop on by.
Yeah, I added my sandscape behind me last week or the week before, so it's even kind of artsy back there.
Did you see I just flipped that over?
No.
I love the sandscape.
This could be like how you play those games at home when it hits the bottom. We're done for the show today, and we'll let you guys get back to what you're doing. The hourglass. Amanda, what do we need to talk about today?
Well, last week we were not able to see the COVID tracker because we didn't get it till after the webinar last week. So I'm going to go ahead and pull that up. I was reading up, this is from our friends at First Trust. And this just came in last night. So we're still seeing, significant decrease in positive cases and deaths, which is really encouraging. And our friends at First Trust made a bold statement to think that we might have herd immunity by mid to late April, which is a pretty big stretch to think that Monday is March, and maybe that on Monday we can say next month we might be reaching that. But it's just incredible to see the amount of vaccines that are being distributed, the amount of people that are being able to be vaccinated. So really encouraging stuff. And to think that all of this, we are approaching the 1-year mark of a full closure for us. And so this chart shows us from February 26th last year to almost exactly a year from the 24th. And today marks a year of that. So just going back to the fact that Moderna had found the genome for the vaccine in 2 days, we were being rapidly distributing and creating vaccines. And people are getting vaccinated probably faster than any other time we've had vaccines in history.
Yeah, 66 million vaccines already, like since probably December, which is, what's that, 20% of the US population? To even imagine the US government was involved and it was that efficient, pretty crazy. I think it's very impressive that many people have already been vaccinated after less than 12 months. So pretty cool.
Yeah.
I know the same concept. The First Trust people talked about a plow horse versus a racehorse type economy. And when the government gets out of the way and greenlights opportunity, racehorse economies, racehorse events can happen, and this is great evidence of it.
I've been exercising with an emergency room doctor for a couple of years now. We go for a run in the woods, and that process has been really enlightening to me. Like in March a year ago, we had some health challenges in our family, and he was anxious to run anymore with me because of that. Because he was subjecting himself to the risk in the emergency room back in March a year ago, and so he didn't run with me until June. And by June, he wasn't anyway. Like his attitude towards the COVID at that point had changed almost 180 degrees, and so as we've kind of done our thing in the last year, I went running with him Tuesday this week, and this was the most profound thing. I said, "How's the COVID in the emergency room?" And he said, "It is non-existent." And this is in Indianapolis, one of the major hospitals. And he said, "As a matter of fact, we don't have any flus or any colds coming in." And they sent me home 2 hours early the other day. And so whether we reach herd immunity by April or not, I think it's getting safer and safer to be outside again. And plus, just normally the cold and flu season ends in about March, April timeframe. So I think those of you who are watching, you might be able to breathe in a little easier and kind of look at some of this data and formulate your own, thoughts about what you feel comfortable doing, because we really want to be encouragers of making the most out of life.
Math has no feelings.
It's an unemotional kind of thing, but I understand this thing has a lot of emotions
Oh, it
attached
does.
to it.
And when I look at the chart there, and especially that top left one, it reminds me of what we look at every day in the numbers. They just are what they are. But to take action steps after looking at the numbers, that's where unique personalities come in. That's where fear and opportunity come in. And I see the stock market when I look at that chart on the top left there.
Yeah. Well,
Math does win.
Yeah, math wins.
Yeah. So that's I've been accused of not being emotional enough about things, but I think sometimes when I see things mathematically, and most things in life you can almost see the math in it. It just happens. And so, if you're raising kids, if you go from 1 to 2, you become a less effective parent. And if you go to 2 to 5, you become a humble parent, and it's just math once you get outnumbered, you're not as great of a parent as you thought you were between 2 or 1 and 5. And when your kids are 13 or 14, you become a less effective parent. And by the time you're 25 to 30, you're probably a pretty good parent. But that's just math.
And just opinions don't have to be cemented.
Yeah.
And so you can stay flexible in your opinion, just because the numbers do change. And so you can change your opinion too. You're totally entitled to that. Yeah. We're not going to look back, hopefully, and look at a recording from here and say, "What the heck? Those guys said this." Well, times have changed.
Yeah.
And so we want to stay fluid in what we're talking about too.
Yeah. We had a neighbor at our first house. He had a willow tree, and that willow tree always sticks in my head. The wind would blow, and it would just kind of do this thing. And I think particularly in the culture and environment we live today, to anything you can do to breathe in and breathe out and not be so dogmatic. You might be dogmatic in what you think, but expressing that to other people today. Probably
what does that term even mean?
Dogmatic means absolutely, I'm right on this. It's kind of I'm absolutely, by golly, I'm right. Well, you might be, but you can be right and friendless. So, there's a lot of things about you can be a fool and keep your mouth shut, nobody will know it, and so the willow tree attitude can probably mend and build relationships, not only in your friendships, but even in families. I know there's this season, the last year, I've heard of more challenges within families than maybe any time in my life. And there's an old saying, "Blessed are the peacemakers." And I think now the sun's coming out more regularly. The fresh air is going to allow people to think better than the gloomy days in Indiana. And I think those of you that are natural peacemakers, now's the time to be a peacemaker. And those that aren't, be a messenger of peace to those around you, I think is a good thing. And I'm not even a hippie. I don't have the ponytail.
It's interesting that you bring that up. I was coaching a basketball game this week. It's a playoff game. I told Amanda I was just anxious as can be. I was all in. My reputation's riding on these kids' success or failures. Just kidding, kids. But one thing I wrote on my play sheet on our game plan for me was to smile. I had it highlighted. I had happy faces all over. Now I'm wearing a mask. Okay. But if I can smile, that helps my countenance, that helps me inside. So I just want to encourage you, whatever the math, whatever you're seeing out there, even if other people can't see you do it, just smile. It really helps.
Yeah, it does. What about this market, Doug?
Well, it's funny. Last week on the show, we talked about the NASDAQ a little bit, and we observed that there were 3 down days before Friday, and that was unique. I mean, that hadn't happened for a little while, and so I didn't really know I never really know what to expect going into the top of a week. Things change. Early in February, we had a pullback, a sell signal. And that was mainly because there were some trading opportunities with shorts and longs on a couple specific stocks, and it really scared the market. But it didn't scare it long, because within a couple of days it was back and it was roaring again. And so when I saw the 3 down days last week, that was kind of like a head scratcher. It's okay, something is happening here. And then this week, as you can see on the far right of this chart, you can see some really long lines. Highlight that there, Keith. Those long lines are telling you the market really can't make up its mind. It's got some increased pressure, and those long lines are red, which is even a bit worse. And so when this started to happen, it was really confirmation of what we saw even a month ago, that there was just increased anxiousness beginning to happen in the marketplace. And so for the first time since October and first time since September, we're starting to test some of these lines, like our 50-day moving average. And I talked to Keith a little bit about this morning, that I think this is just a great time to have some money that's risk off. And you're able to sit back and say, all right, well, when it's time to put risk on, where will we want to go? Where will we want to be? And so it's a great time to pause and just reflect on the risk that's in the marketplace, because there is more, but that normally means that there's some great opportunities that are going to be coming down the pipe.
That I highlighted there, Doug, the 21-day moving average. And the moving average is basically if we took the price for the last 20 days and drew a line on that average price, that's what that is. So this green line is the 21-day. I think the pink is like the 60-day moving average or something of that nature, and the red is the 50-day moving average. And so those averages right now are converging right between these 3 red lines there. And that's where the market seems to be kind of bouncing around, trying to figure out what it wants to do there. In the last year, when it comes down near those averages, it's bounced back up. So that's what we're waiting patiently on.
Yeah, and you look back on September and October where you highlighted, they bounced back, and all was well again. But they could go through it, and so we have some fail safes set up for if that were to happen. And so this is an incredible time to be a market investor. It always is, but this is really interesting right now to see what happens. Do we break through, or do we bounce off and go to new highs? We'll see.
Yeah, there's a lot of socioeconomic, political things going on in the backdrop. I haven't had time to read up on what happened last night in Syria, but we've got our governments wanting to print more money and send it out, and the fear of inflation. A lot of things are going on out there that proves to make it an anxious time for investors. And our goal, I think, is to just to manage your resources as though they were our own, and take a reasonable amount of risk to get a reasonable return on those. So that's kind of how we're managing it.
one of the things that Debbie brought to our attention in January was just, going through our required minimum distributions. And every year, some of you have to do that. You're required to take out X% of your account every year. And now's a great time to give us a call and touch base about that. Maybe you're taking income monthly. Well, we could consider pulling out more and then having it in your checking account today, and then you just pay yourself your salary as the year goes along. And so there's some risk reward opportunities that we could take a look at. If we think markets are pretty good and you've had some good returns, maybe it's time to pull that out and buy the car. I know some of you have done that this year, and good job. You're basically just trading assets anytime you do this. It's your money. It's either invested in something or it's invested in something else. And it's a great time to talk about it if you have some withdrawals or cash needs.
That's awesome. Some of the notes I scribbled down today, one of them was just the idea of learning. And I've been learning about a lot of different things in the last 6 months. I've learned a little bit of the difference between a 22 long and a 22 short. And that's just where my brains had to go. But you mentioned a while ago the longs and the shorts, and I thought I'd just give a quick definition of those to you that haven't heard that term before. And I'm not talking about 22 longs and 22 short, but the markets where you're talking about longs and short. That's just an industry term. Long means that you're optimistic and you hold shares in that company. Short is when you're pessimistic on that. You expect something to go lower, and so you sell something for which you don't own. And we've seen, the Reddit and some of the other online things manipulating the markets and some of those things where the short sellers had thought they had easy money in the past. And we saw a little bit of that flare up again this week. So the idea of learning is a lifelong pursuit. And that's what I would encourage you all, depending on where you are in life today, not to give up that opportunity of learning. When I was on my run with my doctor friend this week, we were just talking a little bit about that. And he was telling me he was doing a project at home, and I told him I wasn't very good at that particular thing. And he said, YouTube is really spectacular. And as we were talking, he goes, sometimes I hit things at work that I don't have them refresh in my memory. I can go refresh my memory and relearn it. And I thought, holy cow, that the reality that he would admit that to me. But just think of your doctors in the past that couldn't admit that, didn't have YouTube to go back and watch a video. So the possibilities of learning today, no matter where you are in life, no matter what age, no matter how young or how old, you can learn things that you never could have just maybe a decade ago.
Yeah, it's a great time to be learning. I love it even in our profession. The things I've been learning and exposed to here over the past even 6 months have been just dynamite. And it also takes a humbling spirit at times because, normally when you want to learn something, it's because it's not going well, or you have this adventure that you want to take off in. But yeah, just staying humble and being open that your way may not be the best way, but you can improve on it. And so I love that process of learning. It's great.
Yeah, I think time affords you the ability, if you're going to be honest with yourself, it affords you the ability to learn. And, I'll mark my 35th year of helping people with their resources this year. And I've caught myself telling people that I am shocked that this long in the industry that I'm learning things that I should have had somebody teach me 30 years ago and nobody knew it to teach me. And so that kind of energizes me even this season of my career, that I can learn things that can help people that aren't that complicated, but just nobody ever told me. And so the possibilities for Amanda and you, Doug, and all of the people on this broadcast to learn new ideas is just amazing.
Yeah, it's a lot of fun. Could we take a look at the VIX real quick?
We can.
Are we still on the charts?
We are safe.
I'm not sure if we.
Yeah, we are. We're sharing
Okay.
our screen.
This is really interesting now. Again, this is the volatility index, and you can see when we go back in time a little bit, that real like high peak that you're seeing. If you're new to this call, that was during the initial coronavirus, like kind of fear, that the numbers weren't really out and people were forming opinions fast. And the VIX, it spiked. There was a lot of fear in the marketplace. And then it slowly started to come down at actually a pretty good pace. And then, it came down to under 30. And when it's under 30, I normally feel pretty good when it's under 30. And so here recently in the last week, it spiked up again. And basically what this is telling us is it's okay to be a little cautious.
Yeah, my own observation of the market this week is the VIX wasn't even a real true indicator of how volatile the market was. I thought the market was much more volatile the first half of the week, even than what the VIX was showing. And
Yeah,
I look at it every morning, and I noticed when I jotted it down in my journal how low it was. I was thinking, man, that market yesterday seemed a lot riskier than what the VIX was indicating, and then yesterday it popped up pretty high. And so, yeah, it's definitely. I think an analogy that comes to mind is I've heard of people going ice fishing, and how you get a truck out on the ice, I don't know. But definitely when you get later in the winter time, you better be careful with what you're doing. And I think we're later in this particular rally, not that it's over,
Right.
but I think that if you're gonna just, if you're trading your own account, you're just gonna jump in and hope everything works, it's really a dangerous time to try that, I think.
Yeah, and as you're reviewing your statements, we're near the end of the month. February, Keith, I may have mentioned this last week, he bought us some stock almanacs, and they have just been great to read. I'm really enjoying learning through the almanac. And February normally stinks. It's not a great stock market month. And so, here we are again. February has been pretty tough. And so we go into March, and in March, there might be some expectations of what second quarter results could be from an earnings standpoint, from a sales standpoint on how companies are doing. And we can go into that with a little bit more optimism. And so because when you're reviewing your statements this in the next couple of days, or you're going online to check out your account, you're going to see more cash in hand. And that cash at hand is looking for opportunity. It's also safety hedge. And so as we go into March, a little more optimistically, historically, that's what we'll be looking to do is where are good places to put this cash?
Yeah, I marked up the chart there, Doug, where you can see where we started off February, where it looked like it was just going to keep rocketing up, and then we hit this day right here. And so right now we're down for the month of February. We'll see how it goes out. There's just a lot of moving parts that make people anxious, and we're just trying to get your investment situated where we feel comfortable for not only the short term, but for the long term as well. So,
and some of the typical hiding spots, even, and we don't need to highlight these, but or look at the chart on, but gold and silver and things like that, those are typical zones where they don't necessarily match whatever the market is doing. But those refugees haven't even been all that great. And so it's just an interesting time. We know cash is not paying you anything. It's dirt. But at least it's there. It's a preservation. And so that's why we've chosen that vehicle. If this was 15 years ago, we'd probably be looking for some safety havens and bonds and looking for some opportunities there. But there's even more risk in bonds today than we'd like to take. So that's why we keep using cash.
I didn't prepare well enough to pull up I don't know what the 10-year treasury, I don't know if you can find that for us, Amanda.
I know an ETF, I don't know.
Yeah, I don't know what the index is on it, but the 10-year treasury is an indicator of what bonds, and those interest rates have spiked up these last probably a couple weeks. And so people that were in bond funds probably got kind of punched in the nose a little bit the last couple weeks. And the problem, I think, for why bonds are selling down low is if
try TNX.
Say it again.
TNX, so probably 0 TNX. Give that a whirl.
I don't know why it does that.
Is it
not
working?
cooperating.
Not, no big deal.
That's okay.
Yeah. Try one.
Don't sweat it, man.
Oh, there it is. Yeah.
Okay.
Yeah. So
Did we switch over?
let me
Or
share
are you
this
seeing
thing
that,
real
Amanda?
quickly.
No.
Okay. Yeah, just
Yeah.
you'll see it here.
Yeah. So this moves the opposite of the value of bonds, is what this chart shows you. So when this is coming down right here, bond values are going up. So if you had, in your 401k, a balanced account, you were making money on your bonds over
And
here.
a balance account's like what, 50-50? Like
It could be 60-40, 50-50, but it's
so
got
you might have some
bonds in there.
bonds, you might have some stocks in it.
Yeah. And so then interest rates bottomed out over here. But if you look what's happened here in the last few weeks with interest rates, they've gone up 50% from where they were. Well, that's going to have an
That's
impact.
crazy.
Yeah. So
Even as low as they are, that's a crazy move.
yeah. So, and I think we've been saying for the last few weeks that it's a difficult place to be out there today. And one of the things we just talked about as a team this week that we put in this next month's anchor was the idea of integrating family dynamics with maybe a way of thinking about your finances differently. And if you got questions what we're talking about, that we could probably better serve you on just a phone call on some of those things. But there's ways to transfer risk amongst your family members. And I don't know anybody's really talking about that in the financial services industry, but I think that's a really wise thing to kind of contemplate and look at and think outside the box.
Yeah, just thinking that your money, I mean, that's a big concern for a lot of us is, will I outlive my money? And that's something we talked about in our team meeting just yesterday. But for many of you, the odds are your money will be around.
Yeah.
And again, it's not an emotional thing. It's just kind of is what it is. And so what do you want to do with it today?
Yeah.
And how could you objectively look at that?
Yeah. I'll throw a teaser out there. And I had a client that shared my last name, many years ago, and they were older, like 90, and then their offspring was younger, like 60. And so the investment objective between the 90-year-old and 60-year-old would be maybe 180 degrees difference, right? And
the compliance alone would force you to do that, whether your attitude was there or not.
Yeah, the regulatory things wouldn't let a 90-year-old invest like a 60-year-old. I don't think. Maybe
you'd have some explaining to do.
Yeah.
You could do it, but you'd have some explaining.
You're gonna have to explain.
I'm not saying it's right or wrong. I'm just saying, making an observation.
Yeah. So I presented to the 60-year-old who was power of attorney for the 90-year-old. Here's your choice. You can put this in a guaranteed investment and you're going to be out of money in X number of months. You can put it in a higher risk one, like a 60-year-old might do, and you could be out of money in X minus, 8 months, or you could have money X plus 8 months. Either way, if the 90-year-old lives long enough, you're going to be out of money. So you can manage this money according to the 90-year-old's life expectancy, or you can manage it according to your life expectancy. And here are the known risk and possibilities. And so those are the kind of creative ideas that I don't know that anybody's really talking about in our industry. And I think you as investors, there's a lot of possibilities if you think outside the box of how you can make the most out of this market and actually reduce risk. And so we're happy to talk you through some of those strategies and help you think differently than maybe things that you hear on the media or read in the paper.
Yeah, that's great. I'd love to have that conversation this next week. That's a good idea.
Yeah.
Is that it? Any last thoughts?
I didn't bring a dad joke today, so I feel bad that I was ill prepared.
I've got one for you. I can top this off with a question. An avid listener has thrown out a question for you two. How old do you have to be to wear black knee-high socks with shorts? It's an opinion question, really.
I think the cool kids were doing that before, weren't they? Weren't there some running socks like that? I saw them in the gym and I thought I couldn't do that. I think it's more, are you saying running shorts or walking shorts, like cargos or things?
I think this person had cargo shorts in mind, but.
Okay.
I think my idea with that is whoever this person is, and it may be close to my bloodline, I would encourage you to just go out and try it and see how many thumbs ups and likes you get and put math to it and then plot out your chart and then make your decision on the future based on those results.
I think, compliments to whoever had that question, because I had a similar question. I went skiing with Caleb earlier in the week.
Oh,
And my question was, because the temperature was so nice, could I wear my jeans as opposed to my ski pants?
No, it
And-
could be 100 degrees and you're not allowed to do that.
Yeah, and so I got affirmation that it was a bad decision to try to go with my jeans. So whoever's asking about the black socks, you could take it to the ski slope and ask those folks for an opinion.
We'll get outside this weekend. It's gonna be nice.
All right.
Wear your black socks and your shorts. Have a
Hey,
good
nice
weekend.
work this week, everybody. Have a great weekend.
See you guys.
Thanks, bye.